In 2020, Pinduoduo reported 788 million annual active buyers on its platform compared to Alibaba's 779 million, making Pinduoduo one of the largest e-commerce companies in the world by active buyers. In this video, we're analyzing Pinduoduo stock and how sustainable the company's growth is moving forward. For a background on Pinduoduo, check out our previous video on the company before watching this one. Throughout 2020, Pinduoduo experienced hypergrowth in terms of both revenue and users. Pinduoduo's revenue increased 146% year-over-year to $4 billion in the fourth quarter of 2020, making Pinduoduo one of the fastest growing e-commerce companies in the world despite its large scale. As for user growth, Pinduoduo experienced strong momentum, adding on average over 50 million annual active buyers for each quarter in 2020. However, as Pinduoduo approaches 800 million users, its runway for user growth is shrinking. As a result, user growth is expected to slow down in the coming quarters. To sustain its high revenue growth, Pinduoduo will have to focus on increasing the average revenue per user, or ARPU, on its platform. To accomplish this, Pinduoduo management is focusing on engagement as the core of their strategy. They are prioritizing one area in particular, agriculture, and by extension, groceries. Pinduoduo's long-term goal is to sell $145 billion worth of agricultural products annually by 2025. It's progressing towards this goal, with GMV from agricultural products doubling to more than $41.5 billion in 2020. In August 2020, Pinduoduo launched Duo Duo Grocery, its grocery pickup service that helps local farmers and distributors to sell directly to consumers. Duo Duo Grocery is one of Pinduoduo's main initiatives to increase its ARPU, so this business will be the focus of this video. Duo Duo Grocery operates a third-party offering, meaning Pinduoduo generates revenue from transaction fees for the services provided to the merchants and farmers on the platform. Pinduoduo is approaching Duo Duo Grocery as an integrated part of its e-commerce platform and as an extension of the experiences it can offer. Management believes that there will be strong synergies with Duo Duo Grocery and Pinduoduo's main platform, in the sense that Pinduoduo can fulfill user needs that they previously weren't able to address. Duo Duo Grocery caters to the rising demand that consumers have for convenient, affordable groceries, with the service available in 300 cities. Duo Duo Grocery is expected to contribute to overall platform engagement, and as more users become more familiar with Pinduoduo's platform, spending is expected to increase as well. However, to successfully deliver fast and reliable grocery services, an agriculture-focused logistics infrastructure is needed. Management has acknowledged that it needs to become more asset-heavy, as groceries is an operations-heavy business. This is a major challenge for Pinduoduo, as other competitors, including Meituan, Alibaba, and JD.com, are also investing heavily into logistics infrastructure and operations to compete in the grocery industry. JD is a competitor to highlight because of their logistics expertise and move into groceries and group buying through Jingxi. Since JD operates a first-party logistics network, JD has more control in terms of both quality and efficiency over their logistics. This type of logistics model requires significant capital expenditures, which has served as a major barrier of entry. Meanwhile, Pinduoduo is working with third-party providers to make investments in warehousing operations and delivery logistics operations. Pinduoduo's goal is to be able to deliver groceries within 24 hours. Establishing this logistics infrastructure is also important for sourcing and forecasting. Determining how much to sell or what price to sell products at depends on the ability to forecast customer demand accurately and then organizing the supply chain around these forecasts. If Pinduoduo can efficiently organize its delivery logistics and successfully forecast product demand, there are many opportunities to drive synergies between Pinduoduo's platform marketplace and Duo Duo Grocery. Meanwhile, on the supply side, most of Pinduoduo's suppliers are local, with over 12 million farmers on Pinduoduo who are sourcing and supplying to users. These farmers could all be potential sellers or suppliers for Duo Duo Grocery, provided that they have enough support around logistics and business intelligence coordination. Over time, this infrastructure could support not only local suppliers, but suppliers on a nationwide basis that can leverage the supply chain available on Pinduoduo's marketplace. This could be extended beyond agricultural produce. Pinduoduo's vision is to become one of the world's largest agricultural producers, and by doing so, become the largest grocer in the world. Since the development of this logistics infrastructure will take time, management has stated that profitability won't be a target for them to set for Duo Duo Grocery as of now. The development of this logistics infrastructure will result in significant capital expenditures, which could pose a future risk due to Pinduoduo's current lack of profitability in their main business. In addition, management's statement regarding the fact that they are not focused on profitability is also potentially concerning. Pinduoduo has historically used price subsidies to attract customers to their platform, meaning products sold on their platform are discounted significantly, sometimes even below cost, to encourage customer purchases. If Pinduoduo uses aggressive subsidies to attract users to Duo Duo Grocery, this could result in more cash burn to an already unprofitable business. Another risk that Pinduoduo faces is its source of user acquisition. Pinduoduo acquires a large amount of its user base through WeChat, a messaging platform owned by Tencent. Pinduoduo has access to Tencent's 400 million daily active users on its WeChat mini programs. WeChat mini programs make it easy for users to access Pinduoduo's platform within WeChat, driving additional user traffic. However, it was recently reported that Alibaba's Taobao Deals, its social commerce platform with over 100 million monthly active users, would be launching its own mini program in WeChat. Historically, Alibaba and Tencent have been major competitors and still are, but with new platform regulations introduced, this marks a major turning point in the relationship between the two companies. With Alibaba's platforms being introduced to the Tencent ecosystem, Pinduoduo faces another major competitor. In addition, a major question that investors have to ask is whether Pinduoduo's users are loyal to the platform or if they are only using the platform for discounted prices. Despite high gross margins, Pinduoduo is currently unprofitable due to its high sales and marketing expenses, which include price subsidies. Over time, Pinduoduo needs to reduce these sales and marketing expenses to generate net profits. However, this is highly contingent on users sticking with Pinduoduo without requiring significant price subsidies. It also appears that many of Pinduoduo's new users were attracted by the discounted prices on the platform instead of brand loyalty, with Pinduoduo's average order value decreasing 15% to 43.5 RMB in 2020 as compared to 51.1 RMB in 2019. However, average orders per buyer increased 44% year-over-year, suggesting an increase in platform engagement. Moving forward, with Meituan, Alibaba, and JD.com operating in the same industry, this will be a highly competitive market. Another major announcement regarding Pinduoduo is that Colin Huang, the founder and chairman of Pinduoduo, will be stepping down from the board. This is less than 1 year from when Huang stepped down as CEO in July 2020. The super voting rights attached to Huang's shares will be removed after he officially steps down, entrusting the voting rights of these shares to the board. Meanwhile, Huang pledges these shares to another 3 years of lockup, meaning they won't be sold off. Huang stated that he will spend his time after Pinduoduo working on food sciences and life sciences. What's important to note is that as of Q4 2020, Lei Chen, the current CEO and soon-to-be chairman of Pinduoduo, is the only member in the entire C-suite. Despite being a near $200 billion company, Pinduoduo has no CFO or COO at the company. Regarding stock price multiples, Pinduoduo trades at roughly 11 times 2021 sales. With a relatively high multiple compared to other e-commerce competitors, investors are betting on Pinduoduo to continue its high top-line growth as it expands its initiatives in agriculture and groceries. If Pinduoduo can successfully carve out a share of the market in these areas, then Pinduoduo could reach the high growth expectations of the market. However, if Pinduoduo fails to achieve these growth rates, then Pinduoduo stock could experience significant multiple contraction. Regarding the sustainability and profitability of Pinduoduo's growth, this will be heavily predicated on whether Pinduoduo can successfully retain users on its platform without the use of aggressive subsidies. The numbers that will come out in the coming years will paint a clearer picture of Pinduoduo's business strength or weakness. Subscribe to stay updated for future videos, leave a like, and comment down below what companies or stocks you'd like to see next.